What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and what an incredible day we've had with CPI. I hope no one got caught in the storm, not on the wrong side anyway. And yeah, let's get straight into things. So you'll see how we're aggressively trading lower. This is the kind of displacement I need to now be comfortably bearish. Wow, in terms of looking for more sell side targets on a higher time frame. Now, if you remember a couple of weeks ago, I was stating how I'm not going to be bearish until I see significant displacement, as in this candle here wasn't enough for me, this green candle, this up close wasn't enough for me, but now this, this is definitely and certainly enough for me, and I'll give you a few reasons why. So first of all, this bullish order block right here, we've now traded through the 50% level of that, which is what we call consequent encroachment. So the fact that we're disrespecting that is saying to me, okay, we're now disrespecting bullish PD arrays. So what does that suggest? It suggests that we're likely bearish and need to start hunting for some kind of discount PD arrays to trade to. Furthermore, we've taken out this significant swing low aggressively too, as you can see, and yeah, just in general, the time of the year as well, in terms of expecting a quarterly shift, that as well. And I am intending to make a video on the IPTA data ranges again, just to get an update. But overall, yeah, it's been quite a crazy CPI. So in terms of the weekly, what we can start looking for now is for some kind of discount PD arrays for us to actually reach for. Now we have this week, April 8th, week commencing 8th of April's low to target first, so we can get that drawn out as sell side liquidity. Whether we reach it this week is another story. We may find ourselves, retracing on Thursday and Friday, potentially a midweek reversal. We do have to be careful. But generally speaking, we have this low, and then we have a nice big weekly fair value gap right here as well that price may want to trade into. So I'm just going to have those marked out for us just so that we can refer to them. And then another thing I want to draw our attention to is going to be the midpoint of these wicks as well, because consequent encroachment of those is going to be significant. So let's get those marked out like so. We'll make it red and dashed. And now we have a few levels that we can refer to when if price is to continue on lower, which I would like to see happen. But as I said, I don't know whether we're going to be reaching that this week, because we've already had the fact that we've had such a huge move before Thursday as well, says to me that we may witness some kind of reversal or find ourselves, retracing a little bit on Thursday and Friday. So that's just something to take into consideration. Let's now go down to the daily, and you can see clearly we had a crazy CPI. So we opened, I think we just about touched the low of Monday, and then from then on have been trading lower. So all the levels I brought our attention to in yesterday's video, if you've watched it, that 50% level we traded through. So, and then if you remember yesterday's video, I stated if we get through that, then we're likely going to go for the low. That's what we saw happen right here. And right now you can see we're just about filling this liquidity void right now. So we're reaching that level down here to fill in this range. So what happens when we get down here? Well, this is a bullish order block, and you can see we're pretty much inside of that. So I do expect some kind of bounce. Like I said, whether price wants to continue and run for these sell stops is another story. But I would like to think that we can at least get to the high of this bullish order block right here. So I will keep that marked out for us. We'll make that blue. And then we can drop down to the 4 hour and get a better look at price. So as we trade on lower, you can see a 4 hour bullish order block right there as well. And like I said, we may very well react to that. So that's just something to keep an eye on as we get down there. It is just approaching, what is it? It's just approaching the Asia session, so we may see movement during there. But honestly, after CPI, I don't think the markets are going to be the cleanest to trade in general. I know we do still have a few high impact news events and a lot of speeches for the rest of the week. So generally speaking, I'll just stay out, and I wouldn't have been trading this week anyway. But yeah, let's take a closer look. So we've got the hourly, and you can see how we're just trickling on lower. I'm not expecting a full-on reversal, but I will expect some kind of retracement, because like I said, we do still have Thursday and Friday to trade. So what I'm going to be watching is this blue level I talked about, which is that 4 hour order block. Once we get there, I want to see if we react. If we do get like a bullish response off it on like an hourly time frame, then we could potentially look for some short-term longs with shorts on the pairs. But honestly, in terms of accuracy and everything, we have to be significantly careful. Or either that's going to happen. Let's say we don't react off this blue level. If we trade through it, then we can start looking for this sell side liquidity. And remember, this blue box is a weekly fair value gap to get traded to. So there's two ways price can go. If we're significantly bearish, like if they want to really drive price, they'll send it straight into this low right here. But like I said, they may be nice to us and give us some kind of breathing space at this low right here that we have in blue. But let's take a close look at price. Very, very, what's the word? Manipulated today. As you can see, we traded lower on CPI at 830, and then a massive retracement higher back into the bearish order block, and then continued rejection for the rest of the day. So definitely sweeping out a lot of buyers and sellers. And probably because we're leaving that range, and you know, this is a significant turn in the market. I will definitely get that up to date range video sorted for us guys, just so that we have a better idea of where price may be moving on a longer time frame, because to be honest, I haven't done like a monthly review in a while, so it'll be very interesting to see. So that's going to be everything. I hope that all makes sense. If you have any questions, make sure to drop a comment, and also join the mailing list. If you check the description, you'll see there's a link for the mailing list. Make sure to join that, and also the Discord. Let's now head over to GBP USD and see what went on over there. So we're going to start on the weekly here as well, just to see what we may be trading to. And you can see absolutely huge week, incredible. Now we can start looking for highs to obviously get traded to. So we have this high right here as a target for price. We hit all the target. Again, if you haven't watched yesterday's video, go and watch it. We've hit all the targets that I brought our attention to in yesterday's video, which is great. Very bullish indeed. And yeah, after that high, I think we need to drop down to a lower time frame to start looking in this range from this high to this open. Start looking for some kind of PD array within this range. So what I'm going to do, just to show you how I break down price. So on a weekly, we have a wick here, right? If we take out this high, I'd then expect this like level, this wick to get traded to. So what I'm expecting now is when I drop down to a lower time frame, in this blue box, let's make it white. In this white box, there should be some kind of PD array for us to trade into. So that's how I frame price, and that's how price is fractal when ICT talks about it. And you'll see what I mean when I drop to the lower time frame. But before I do that, let's first talk about this wick. So I'm going to get the 50% level marked out on here. And the reason for that is because we traded through it, the consequent encroachment, that should now provide support for us. So that means that if we do retrace on a daily level back into this range, I expect this level to provide support, offering us potential buys to then run for that high. What you'll also find is that there is a fair value gap here, right? You'll see that we have traded to some of it, but this range, and we'll make this red, just so it stands out a little bit more, this part hasn't been traded to. So we have a few levels to look at. First, we've got this high, and then we've got this fair value gap to fill, and then potentially some kind of PD array in there, depending on how bearish dollar is and how bullish pound is, obviously. And then this midpoint, like I said, I'd like to see it provide support until we get to that high. Once we get to that high, it can do what it wants, but the fact that we traded through it bullishly like this is saying to me it should be able to provide us support. So I hope that all makes sense. Also, someone in the comments yesterday did ask what consequent encroachment is. Consequent encroachment is basically the midpoint of a wick. And you'll see our price, if you study the midpoint of wicks, you'll see our price refers to it a lot. I'm happy to explain more about that in my Discord, so make sure to join the Discord. Let's now drop down to the daily. On the daily, you can see there's a rejection block level and a bearish order block. So this is what I mean by PD arrays to trade into. So this bearish order block, you can see the opening of it, which is the significant part of it, is inside of that fair value gap. So once price hits that, I'd expect to see some kind of strong reaction. You'll also see it's above this high, and it's sitting again in that weekly fair value gap that we had left open. This range up here, if we are going to be extra bullish, the highest we want to see price or expect price to go is going to be the midpoint of that bullish order block volume, which is right here, and that's what we call mean threshold. And the reason for that is because price, if we're going to turn around at this bearish order block, so if this bearish order block is going to do its job, price will trade into it basically and turn around at this point, depending on how bullish it is. If it's preferably we turn around here, like don't get me wrong, I'd like to see it turn around at this at the open of the bearish order block. But again, with all that's going on and the amount of price action we've seen today, anything can happen. But it's just good to have these levels marked out, because then at certain times we can anticipate certain reversals and whatnot. But let's take a look at Wednesday. You can see we traded lower slightly and then aggressively just kept running, hit this rejection block level, and now I think we're just at we're just floating around the 25% and 50% level of this wick, which is quite interesting, isn't it? This red line, remember, consequent encroachment on a weekly level. So once we drop down to the hourly and 4 hour, we should be able to find some PD arrays to key off of that will potentially help us send price higher, assuming we are trying to fill that gap in. So let's go down to that 4 hour. And not really much help, it's just clear green candles and whatnot. And Again, rejection block levels right here, but obviously, well, not obviously, but it looks like price is reaching for these highs. Again, there's a gap that I want to see get filled. There's that red level I was talking about, which I do believe price should respond to. And then on the hourly, you'll see how there's an order block here. So moving into the Asian range and into London, I'd like to think that we do see price stay above this red level. If that's the case, so as long as we stay above here, I'm happy to be looking for longs with the expectation to run for this high in the blue. I'll just show you again. These highs up here and into that daily bearish order block. And again, if price is overzealous, it won't hesitate to get up there, the midpoint, but preferably this is going to be the highest I'd expect price to want to trade moving into tomorrow. So I hope that I hope that all makes sense. So I hope that all makes sense. And yeah, let's now finish up on Euro USD. We'll start. Oh, I've still got my market out here, which is cool. So on the weekly, you'll see how we traded through the gap that I was talking about aggressively too. That 4-hour bearish order block I was talking about in yesterday's video, traded right through that. So again, these are all bearish PD arrays I drew our attention to in yesterday's video. We have completely disrespected them to a maximum level at this point. Like, look at this. So what's that saying to us? We need to be looking for some kind of premium PD arrays to be reaching for. So I'm talking about swing highs, I'm talking about rejection blocks, I'm talking about bearish order blocks. So we've obviously got some more highs up here. I do think the daily will probably offer us more PD arrays to key off of. So I am now looking at this wick because that's what we're trading in. Same thing as what I was talking about on pound. So in this range, I'm looking for price to continue to trade higher. So what am I looking at? Consequent encroachment, of course. Let's get that marked out. And then if we trade through that comfortably too, then obviously I'd expect for these highs to get ran. So now as we drop down to a low time frame, we should be able to find some daily PD arrays within this range that price will likely want to be drawing into. So let's just drop down to the daily, and you can see how we're just coming into this range. There's that midpoint, that consequent encroachment, and you'll see it lines up nicely with this rejection block level right here. So we'll get that marked out as well. Rejection blocks are interesting PD arrays. They are hard to predict, so to speak, but yeah, I always just mark them out because they were taught. So rejection block, daily rejection block, and I'll just get that marked on the right, center, red, and then we also have this, which was consequent encroachment of the weekly. Right, center, let's make it wide just so we can, like so. So yeah, that's pretty much where I want to see price continue to trade higher up to. Let's now drop down to a 4-hour. And you can see there's a bearish order block right here that we'll be trading through. There's really not much to key off of, but I wouldn't be surprised if we saw the London range create a swing high, and then we saw a midweek reversal on Thursday. It is typical for price to do a reversal on Thursdays, so Thursday lunchtime. So we do need to keep that into consideration. So once we do start seeing price break down around 8:30 New York Hill Zone, we should be considering the potential for a midweek reversal, and then we can start looking for shorts moving into the rest of Thursday and Friday. But honestly, it all depends, doesn't it? Let's go to the 1 hour, and you can see how we're just approaching that range. I can get rid of this box because I was just showing you. You can see how we ran these highs, and then let's see what's over here. Again, lining up with a nice bearish order block right there. So tomorrow will be interesting, to say the least, but don't be surprised if price just keep stretching and stretching and stretching, because what they like to do is they'll send it higher and then they'll keep pushing it higher, and you'll keep thinking it's going to, like, you won't know when it's going to stop. So there's no point in trying to call tops. But the reason I've marked out these levels is because if it is going to turn around, or it is going to quote unquote stop, it's going to be at one of these points. So that's just something to take note of. Hope you found this insightful. Don't forget to drop a like, subscribe, comment, join the mailing list, join the Discord, and I'll catch you tomorrow. Peace.